Testing. Testing, testing. Okay. And good morning, everyone. I hadn't planned on doing this, but with the drop, and I was chatting with Vol Trader, who some of you have seen me, chat with over here live. He suggested he wanted to go on and discuss some things. I said, sure, let's do it. And then I DM'd him, and he's ghosting me. But anyway, be that as it may, I'm here anyway. And those of you that follow me know how I roll. I'm true to this, not new to this. And so something is going on, and I'm gonna go live. I don't know who's watching, who's not. I put out a little note. Thank you, Rick. I put out a little note to my subscribers. I didn't edit it scrupulously, but I figured something is better than nothing. This is Monday. We have till Tuesday for me to tighten things up. But I figured people want to get a read on this just like I did. We all woke up well, actually, yesterday the market opened. A lot of us were watching football, and I was like, WTF, Tariff Man. Well, we kind of knew Tariff Man was going to hit on Saturday, and we kind of knew or suspected something was going to be up with Greenland or with Iran or something, going into the weekend. And just with that as mind, I'm not going in any particular order right now. I'm just kind of riffing. So one thing that kind of surprised me on Friday was VIX closed near the high of the, not near the high of the day, but closed up. Usually on Fridays, VIX recedes toward the end of the day. And so, that was just a little, okay, let's see what happens. So now this isn't updating here. I don't know if there's a setting here to get something. I'm not going to even mess with that right now. But the point is, they should be at around 19-ish now. Last time I looked, and VIX and VIX futures are going to settle out more or less equal based on the special opening quote, all that kind of stuff. And so let's see where VIX settles out. And while I'm on the topic of VIX, I might as well just go there and then we'll kind of come back around. Oh, and I put out a post about VIX over the weekend with a little training module that my subscribers are going to get. We're going to do a webinar Wednesday evening, the kind of regular bi-weekly, every other Wednesday webinar for subscribers, and that's going to be the topic. But anyway, be that as it may, let's take a quick look at VIX. And where do I have it? That's not VIX. And that is VIX. Okay, so here's VIX for the Wednesday expiry only. Tuesday is the last trading day. Let me blow it up a little bit so you can see a little more clearly. So what do we see here? Now this is the customer side. I like to look at VIX from the customer side. So customers, you, me, the hedge funds, everyone, are long calls. We have pretty much a ladder heading up to 20. And then kind of a little stalling stuff between 20 and then again at 22. So what does that mean? That means to me that in this low liquidity environment overnight, you remember the best example of this that some of you may remember is the August Japan yen carry trade debacle. When in the overnight session, VIX popped to 60, it came down to only 40, but that was because of low liquidity, whatever market makers had to hedge that. So I suspect quantuition, that part of what we're seeing in VIX is related to this having to be hedged out in a low liquidity environment. I think we probably settle out closer to 19 or even 18, somewhere in here. And that's just what I think. I definitely understand that could be wrong. I don't see us going past 20. What I do think, okay, so let's talk about this. Oh, Jason, I don't know if you want to join the stage, but I'm going to throw you on there. If you want to speak, you can. If not, you can just kind of hang out there. So let's back it up a step. Tariff man strikes again, 10% tariff on, I think it's 7 or 8 EU countries starting February 1st. So we have 11 taco days left, and then 25% in June. June will be having 5 different stories already. With the Supreme Court decision on tariffs possibly coming Tuesday, making the whole thing possibly irrelevant. And we have Davos on Tuesday, where where 6 of the 7 tariff countries, I think it is, are going to be there. So, of course, there's going to be meetings of some sort. And of course, Trump is going to say, me and the Prime Minister of Denmark have a great relationship. We're great friends, or whatever he says. And so, do things turn around Tuesday, Wednesday? I don't know, but I'm kind of calling bullshit on this. So let's take a look. Okay, so that's the VIX situation. Now let's go to the options. Let me show you a chart. That's a very rough string I drew. So again, don't crucify me. Oh, you can if you want. It's happened to better people than me. And I'm going to go back and forth between my chart. And by the way, I went long, just a little MES, just to say it. somewhere in here. Yeah, as we were stabilizing in here. And sold a couple puts, just a little bit. Um, in MES, not AS, just baby trades, just baby trades. Just for science. I like to see how things move. I don't mind investing the money to see how things move. So anyway, let me go to the options depth, and then we'll come back to the chart. But just, well, quick, okay. So the gap fill gang can now party. Here's the Thanksgiving gap fill. That one was already filled. Oh, I didn't put the other gap fill. We had this gap. Oh, where is it? Well, this gap was filled on Friday, and we had was it this gap here? Yeah, it was this gap here. Was a Sunday to Monday gap. Let's put a line here. How do you make a line? Okay, good enough. Okay, I guess leave the line there. So that's that gap from was like it was a Friday, Sunday, Monday gap. So where to go? Oh, not on this chart. I'm sure it works. Okay. So anyway, that gap is right around here. So we filled that gap. Let's put another line there. Kind of right around here. I guess kind of arbitrarily put it somewhere. That's more or less the gap. So we filled that gap so the gap people can be happy. And we kind of closed out and, bottomed out right near 68.50. I seem to remember a number like 68.55 being a closing number or something recently. So we kind of stopped where look left standard price action would say we probably should. Okay. Now I'll go to the gamma. If anybody else is watching other than Rick and my fellow Good Morning Quants, CK, just say hi, like or retweet or repost or something, just so brother doesn't feel alone. And let's go back to here. Okay. So what are we looking at? Let me first do our normal look. The Vol Trader asked me to see if this was customer short market maker long puts or was here. That was why I had it in that view. Okay, so we're right here-ish, I think. Let's take a quick look. Obviously, gonna be a moving part. We're 66, so we're right here. Right here, negative gamma. Temporarily trapped below 75. Positive gamma stall on the way up. Little supportage area right where we bottomed out. But let's not look at this one big bar. Let's just look at this whole big cluster here. Let's see, can you actually see this on painting on? No, you can't. Okay, I'm using the drawing tool, but you can't see me drawing. Okay, never mind. Okay. So we have this whole cluster here that should be supportive. And I opened up the downside view just so you see, pretty large, positive gamma all the way down here. It's a long-winded way of saying, good morning, my friend. That's a pretty long-winded way of me saying, I kind of think that the sell-off is done. We went about 2 standard deviations off of Friday's expected move. I just think this is done. Now, I'm not saying we make it all-time high on Tuesday, but this looks done. So what's our if then for Tuesday? And of course, there'll be an updated one later. So if we get over 75, which, wouldn't surprise me, then we have battle for round number 6,900, also not surprising, with 68.90 with kind of, this sort of look. Bounce between 75, 90, 85, stall here. If we can get over 6,900, then we got a little ladder taking us to where we closed-ish on Friday. Nothing to see here. Sorry, folks. The markets in turmoil is canceled. And then above, we have some calls that were sold near the money at the time. And I didn't bother going higher up, at least for this presentation, because it seems unlikely that we're going to 7,000 on Tuesday. Okay, now, just for ease of comparison, I went to Unusual Whales. What I'm looking at here is the Greek. So this is gamma, not open interest. And let's just remind ourselves that gamma is strongest and most influential the closer we are to spot price. So this gamma over here is small now, but if we were 5 points away, it would be much bigger. And I don't know if this corrects for price movement now that we've closed, so put a little asterisk there as well. Probably doesn't, I'm going to guess. I'm not sure if OD does. I'll have to ask Elias. I'm not sure. But be that as it may, even with that said, and this is all expiries. Let me zoom this out. What I wanted to show you is 6850. That's kind of our negative gamma magnet, where we kind of went right towards. Now, if we stall, whatever hedging was done on the way down to here, buying as these deltas exploded or grew, well, then the inverse happens as we stall, and those deltas, especially in the 0 DTE one, recede, then we get the gamma effect of market makers buying back their shorts. We also will get the charm effect if they stay there, those decaying over time. Maybe volatility goes down, so we get a little Vanna effect as well. So, we have a few things going for us if we're bullish. Now, let me also say, I'm talking my book. There's Vol Trader. Let me also say that I'm talking my book because I was looking at the expected move on Friday, thought there might be a little trouble, but didn't think there'd be this much trouble. And so I sold 68.40. I'm close, 100 points away from Friday's close. I think I'm fine. Am I ready to take corrective action tomorrow, Tuesday? Yeah, if I need to. We'll see. So I'm not that guy that's going to show you only what a genius I am when I get things right. When I get things wrong, I'm going to mumble in my beard. I still don't think it's wrong. It was certainly right with the information I had at the time. I didn't factor in a Trump tariff, but even with the Trump tariff, I think this is going to be fine. I said that though to say, just to make sure we're clear that, am I guilty of confirmation bias? I don't think so, but maybe. I think 68.50, we don't go much further. I think that kind of the bottom is probably in. Okay, let's get back. So this is Val, just you're just joining. This is gamma, not open interest, all expiry per unusual whales. Let's just make it position number just so we can see. Well, then we just get dwarfed by this. We can't see anything. It's hard to articulate it. That's why making it gamma, at least we can articulate something. And what we can articulate, like I said, is a 68.50. Okay. So getting back to OD, let's go to depth view. So let's see what's going on under the hood. So we're around 65, 70, somewhere in here. So we're somewhere in here. So we have market maker short puts above us, market maker long puts above us, kind of a lid. We have more puts up here at 68.90. So they either decay or charm to -1 or 0 if we're over, but we tend to accelerate toward there anyway. Now the in the money puts, the charm effect. So in general, per Valstig's, I'm going to take his word for it. He was a professional market maker, trained market makers. I'm going to take his word for it. That around the 80 delta and the 20 delta is where charm kicks in the most. And so, those are probably near an 80 delta. Now, yeah, it's toward the end of the day, but let's just kind of asterisk that 68.90. If we can fight through this and get above 6,900, then we kind of have to slog through this. But we're slogging through puts. Although the mechanics in theory are the same, I think in reality it just kind of makes a difference. I don't know. In theory, it doesn't matter. But below us, we have everything sold. Where do we have big concentrations? Good morning, Selena. Where do we have big concentrations for Wednesday? Well, 68.10, 67.90, we have a big concentration. That's going to matter, especially near the close on Tuesday. These 2,000 here at 6,800 are going to matter. 68.10 is going to matter, but not much around where the main battle zone is right now. Not much to really help the bulls out right here, right now. There was a kink in the yield curve. Let me find where I put that. Put that in Doc's commentaries, because this is where I babble for my subscribers. You want to hear me babble? I think this is it. Yeah. Term structure elevated the 27th. This is FOMC weekend. No shock. Elevation here. This was before the whole thing on the 23rd. So we have PCE and University of Michigan sentiment on Thursday and Friday. And that used to matter before we had Tariff Man. And so we have a kink there as well. Just kind of, if things normalize, remember that's there too. And That's kind of, let's see if there's anything else. So we looked at kind of the pictures here. So this is what I wanted to show. So we have, if we can get over this area, the 75-ish, whatever that is, we have 90 as the target. Over 90, we end up in here. And we have kind of stalling features kind of right around there where we close 69.40. And that's basically it. Let's look at the chart. We're kind of struggling here at the bottom of the chop zone. I was a little ambitious about where the bottom of the chop zone would be. Maybe we could call it 68.50. I'll correct that later. One semi-last look for now at volatility. Okay, where's my other vol thing? Where is it? Here it is. This is just a teaser. We're going to be talking about dispersion and VXEQ, the volatility of the constituents and dispersion, correlation trades, because we have earnings coming up. So we have to watch how this vol moves in relation to correlation and dispersion. Think of it as a mobile. We want to see Amazon go up, Apple go down, hypothetically. And so could be lots of individual constituent volatility, but index volatility kind of stays pindish. So anyway, Val, what do you got to say for yourself?
First of all, when does the market reopen? Like the
It
stocks?
reopens tomorrow, Tuesday, at whatever, 9:30 in the
Like
real
the
world.
regular tomorrow is a regular session?
Regular day, right, regular day.
Right. So first of all, we haven't seen a 2 standard deviation move for, I don't know, months, I guess. We ended Friday with a 37-point move
Yep.
average for the week for the whole complex, and we basically gapped and moved down now through the Globex almost 70 points or more. So that is a 2 standard deviation move, two expected range move, or whatever you call it, right? So that's one thing which is interesting. Basically, I
And
guess
just by
it's
the way, I don't know if you could see my screen. So I actually put that in vol comparison now versus Friday. Friday
yeah,
was
38.
38, I had 37, whatever,
Yeah,
potato,
so we moved
potato.
about
Now it's
70,
60,
75 points, right?
right,
We
right.
moved how much today from the close? From we
Uh,
closed
we 90
38.50.
points, whatever,
Yeah,
we
so we
closed,
moved we
we
moved
closed
two
this
times
morning.
expected move, which is we haven't
Right,
seen
right,
this for a very long time.
right. And
Uh,
here I did it for the rest of the week, just in case.
and
So
obviously, the fact that volume is thin and there's no, it's not just that volume is thin, but when there's no cash, then a lot of the trading during the pre-market, which is related to the fact that there is cash, right? That there's a known hour when the cash opens.
right.
So that chunk of traders and funds didn't come to work today, right? So it's very fragile and easy to move down. Um, that's one thing. Now, from my measurements, the move down today, max move should have been between 38.50 down to 38.30, which I think has a nice pocket of long positive gamma.
Let me take a look.
Um,
Let
right?
me
You
get
showed
that.
me
Let
that
me get, hold on.
mostly,
Let me get a
mostly,
chart. Okay, go
mostly
ahead.
build out of puts, right? They're long gamma through long puts, if I
Right.
recall correctly.
Yes.
Right. So in their perspective, you know, the market could have moved. They didn't have to react that fast, and they would have reacted mostly under those strikes or into the um, 6,800, right? After you after you reach the peak of the gamma, or even just a bit after it, and that didn't happen. So we already got radiated support, even from the 6850 already, right?
Yep. Agreed.
So the way I see this, 6850 down to 6780 or so, right? This is a big chunk of long gamma,
Exactly.
and it's mostly puts. So from a market maker perspective, even if the market gaps down, runs a bit, you know, worst case scenario, I make more money
Right.
if
You're
I'm
long those puts. You're
right.
marking.
I'm
You're
long
long
those
those
puts,
puts. You're
so
partying. Right.
I'm not in a hurry to do anything, and or hedge pre-market or do some other stuff which I would do if I would be more anxious and stuff, right? But as we said, there's no trading today. There's no spot, so you know there's a limit to how this move can develop. That's why we got the bounce. I came short. I thought I would get the opportunity to at least cover under 6850, which didn't happen. And the structure of things is, first of all, we have a classic technical analysis pattern on the daily chart that we
Hold on. Let me pull up a
developed
daily
last
chart.
week,
Hold
just
on.
ahead
Hold on.
head and
Hold on. Let me
shoulders.
pull up. Let me pull up a daily chart while you're speaking, so folks can follow along. Hold on.
Yeah, put SPX, and instead of bars, use a line on close, so that
Hold
will
on.
make
Let
it
me.
obvious.
Where am I looking for? What the hell happened here?
We want to look at SPX,
Yeah.
CBOE SPX
Yeah.
daily
Hold
chart.
on. So, something happened here with my. There we go. Okay.
Now,
Here it is.
if you switch it from candles to line on close to a line chart instead of a bar
Right.
chart,
Right. And now you're going old school on us.
instead of candles, line, just a line. Yeah,
Just the plain old line.
right. Yeah, just do that. Okay, so you can see the head and shoulders developed on the over the last 10 calendar days or so, exactly. So this, together with you know, those signals I share with you, the red and green signals on the gray charts. Last week I had the main trades that I follow were 70% selling, which is kind of rare. Generally, you know, it gets close to 50%. There is a small tilt that enables me to infer the direction I want to build a position. But last week it was pretty clear cut as to the downside. This also supported my notion of those VIX spreads into the end of March, regardless if they were constructed correctly or not in terms of the strikes. And when I mean the lowest one I have is 1823, right, which is kind of, who knows, because
1823. That's not
yeah,
bad.
maybe. Yeah, but that's my
Okay. Right.
first. That's like my lowest spread, right?
Right.
So I go up all the way to 25 over 35, right? 10 wide. Anyways, so I expected a down move. Honestly, I wasn't aware of the holiday thing. So I had a different plan as to how I would trade it today. But it's okay. It turned out okay. I think the market is overdue for some type of a correction, and at the minimum, we should see a VIX spike into the 20s. And I think, you know, there's enough causation all around
Into
that.
the 20s by when?
Well, I thought we would see it this week.
Before or after Vicksbury?
Yeah, I don't know about those, right? I mean, that's your territory.
Okay.
I
Okay.
just, I just, I just assume we see a 20 print sometimes this week. So, but obviously, I wasn't. aware of. I didn't quite grasp the holiday aspect. So today it would have been easily if there was a market, but there's no market. So I don't know how this unfolds and if everybody does peace by tomorrow. So that maybe not happen. But Head and Shoulders is something that is very commonly used by so many people over the world, right? It's a pattern that people give meaning to, and it's a bearish pattern. So that captures a lot of attention. I checked it over, the various sentiments through the AIs over social media. I saw a lot of mentions about that. Myself, I don't really care about these technical analysis things, but if enough people believe in something, that gives you, it does have its effect. And
Right, becomes a self-fulfilling prophecy.
yeah, I mean, the rationale behind the pattern is distribution, right? The pattern does develop under a regime of distribution over 2-3 weeks. So we have here a kind of 2-week calendar window that this has developed, and somehow it developed in a perfect timing into these over weekend notions of tariffs and whatever. He takes Venezuela, then he takes Greenland, tomorrow he takes London, whatever. So this is like the atmosphere, and we did that special occasion. Not that it's super rare, but it is rare in terms of statistics that you moved two expected moves, right? So right now, the only caveat is that there's no market. So
also, let me throw something else in just while we're in the weeds.
yeah,
This may not be exact, but it's pretty close. For the last 30 days, realized volatility was something like
nothing.
was basically nothing. Was like the difference between, here we go, the difference between historic or realized and implied was something like a 7-point difference. Usually the difference is 3 points. And
4.3, yeah.
so either the market is really stupid or realized is about to start to realize.
You can just go ahead and add a Bollinger Band of, say, 20 days or so over this chart, and you can see there's probably an indicator called Bollinger percent. Instead of the actual bands on the chart, you have like a sub indicator.
I used to use that one, Bollinger percent.
Or you have historical volatility. You probably have something called historical volatility.
I have a.
Yeah.
Have
Now on a weekly chart, if you look at the weekly chart, when you add this historical volatility, you look at the weekly chart, you get a very, very low and rare value in terms of the weekly. So yeah,
look at historic volatility all the way down there.
Yeah, if you zoom out of this so we can see more data, we can see that. And change to weekly, please. Could you change to weekly instead of daily?
Yeah.
And this is a 20-day volatility?
I'm not sure if I have it on 20 or 30. I think, I'm not sure if this is off the shelf or if I fiddled with it.
Yeah, 20 day. Yeah, it's okay. It's okay.
It's 21 trading days, 22 in a month, so 20.
And this is a weekly chart now instead of a daily chart, right? Yeah. So from a weekly perspective, as you can see, we're reaching levels that, you barely get there. The last time was last year, and the previous time
October,
was like
November rally, right?
Yeah, and then the previous time was like way back a year or two back, right? Yeah. So, and when these hit, then obviously there's demand for long vol in the market. It's very cheap to be long vol. I think we talked about it when I told you it's like a QE type of, somebody's providing endless amounts of liquidity at such low volatility that it's just, it's very tempting to start. 90 something percent of the time my positions are directional in nature, but they are vol, and I do aim to to get theta and stuff like that. Lately, they're so low. When I come to do a spread on the SPX, my instinct is, okay, bought at the money. I want to sell 2 times out of the money for the spread, but then I say, no, I'm not going to sell it. Like, it's so cheap, right? I mean,
Right, doesn't pay, right, it barely pays, right.
yeah, it barely, I mean, if you can do a 100, let's say you look at the next Friday, right? If you can't get an 80 point, 100 point wide ratio spread, don't do it. So now you barely get 50 points. So if you buy the at the money put and you sell 2 times the puts out of the money, trying to financing in total what you paid for the long put, you can't go out more than 50 points.
Right.
It's very, very cheap. Very. So you basically say, okay, I'm going to buy it, right? I'm just going to buy those puts that I'm not willing to sell them, right? Just to be loyal to your own notion. So I think the market is positioned in that way, and that creates additional pressure. You have that technical analysis pattern, and the structure is much weaker in terms of,
Structure is weak.
yeah, like you don't have all those massive in the money calls that generate those buy the dips and stuff. So yeah, but this week is a shortened week in that sense. It's like a safety net for the market, right?
Yeah.
It can't do much without the real cash and the real trading. So I think it's bearish. I think we could trade 6,800, maybe lower, right, through the week, but that's pretty much it. Still a big move relative to the last month, but that's pretty much what I thought would end up, and we would probably tag the VIX 20, and that would be it for the week. And as you showed, it's very interesting to see their long puts down there. So being long puts for the market maker, he's much more at ease, and it doesn't rush anything and can react easily pretty much.
So
He
let's go
basically
to
just needs to decide where to take profit rather than do something else.
So let's go to depth view and look at tomorrow. Okay, so, I mean, look at Wednesday. So tomorrow, whatever happens, happens. We bounce around. Maybe we close near 6,900. Maybe we undercut and close somewhere, 35, 40. I don't know. Then we go into Wednesday rather, with a pretty decent wall down at 67.80 again.
Yeah, I mean, down to 6,800, they're basically long gamma, right?
Yeah, so it's a pretty decent wall. So, unless volatility goes above 20, really, it's going to be hard for me to see this breaking. We could get in this area.
Oh, you could get a flush just by, regardless of vol, you could get a flush.
Right. There's real money buying and selling too. Exactly, real people.
Yeah, most of the people wake up to these headlines, and they don't live the market like you. They get spooked a bit, and right, like the joke about next thing he's gonna take not Manhattan but rather London. So people can get spooked. You can tag those lower levels, and but obviously this structure is it's pretty cushioning to the downside. Unless you break 6,800, then it's a bit different.
Right, then it changes, right.
Yeah, it's a bit different, right?
Below there is just thin, so there's really nothing to hang your hat on. You know what I mean? It's a couple of contracts. It doesn't mean anything. You know what I mean?
True, but just I'm talking about January 21, right?
January 21. Okay, yeah. January 21.
And you can see also that there is a position there carrying over into January 23. You see, it's pretty similar there at the 67.80, right?
Yeah.
So this is customers long puts. That's why we have the minus there at 67.80.
Well, I mean, it looks like to me, it looks like it's a debit spread. It looks like it's a credit spread. Short 67.85, long 67.80. To me, this looks like a credit spread, a 5-line credit spread.
By the way, why does it show minus 2,500 there? Yeah, when the calls and puts, oh, sorry, that's the net. Okay, so he's short puts, meaning customers are long puts. Yeah, that's what I meant. So that's the hedge, basically, I think, of the market, just under 6,800.
Yeah, and there's so my tuition says so 67.90. It looks like you have 5,000 ish, 67.90, 67.80 put credit spreads. So these bought these, but somebody came and threw a turd in the punch bowl and bought 2,200 puts right in the middle of this, kind of tilting this, kind of against this,
Yeah, I mean, customers are pretty short puts all the way down to 6,800, 6,790, like in a big way, right? It's pretty dominant over the different expiries.
Right.
So like people fell asleep on the notion that you're not going to break 6,800 no matter what, and that worked for the last couple of weeks. But if we break that, there's so think about it. This represents a lot of institution passive funds and and other managers, right? Which basically assume that event doesn't happen, and if they wake up to that, then we'll see some selling, heavy selling to the downside, just out of stop losses or just risk off type of 6,800. Pretty clear as a line in the sand between.
Well, really, let's take a look at this real quick. Remember
Yeah.
when I showed you the unusual whales charts, the 6850? So here's what's going on with the 6850. Where was it?
But we saw there are two strikes there.
The end of the month, which is another place where institutions will park, not
They're
this
long
bullshit
puts.
on. Yeah. So 6850, which is where we are, is the long puts, and it's going to take a push to get through that. But then if we do, then they start to be, to decay down to a -1 delta. But if we're above it, then they become a 0 delta eventually. So mentally, I'm looking at 6850 round number. A lot of bearish bets there. How does that hold? That's my first test. How does
Yeah,
that
but
hold?
that's January 30.
Right, that's closer. That's close enough that it shows up on a gamma chart even now. Market makers still have to hedge that. They can't pretend it's not there.
Yeah, sure. But the way I see it, because those represent like a big chunk of institution and they don't change hands too much,
No, they're
right?
not going to change hands. They're going to sit
Right.
there.
That's clearly the hedge of the institutional portion. And we see a lot of green up and around those levels in other expiries. So like, it's like financing those hedges through smaller positions of short puts from a customer perspective. And so if that flips, right? I mean, if the market breaks, then they have those puts partially financed through the other expiries. And if it doesn't, then not a big deal because they don't lose too much. But clearly that is the level, as you say, that where the market really shifts and wants to be already partially hedged before something else happened. And then you have the 6,800 just under, which is the next level that the market could go down. Now, again, I don't know if the market, like, all I saw was 6,800 for this week. We haven't gotten there yet, so I'll be surprised if it goes through that. But I think we could tag towards that and a small spike to the 20 on the VIX. I think it's pretty ripe for that. Today on Globex, I haven't seen any buyers, which was kind of strange after the big move. And but then again, there's no market, so maybe that's why I didn't get any signals from the options and stuff.
So for right now, the easy trade, if you're just scalping, people are shorting, you know, I would suppose.
Yeah, now you don't even have Europe, so I don't know what's like. This probably doesn't do too much from here.
Yeah, yeah, you have a bunch of people, pajama traders in Asia, I guess,
Yeah,
scalping. And some guy in his mom's basement in Nebraska. And here we are. Here's that capital level, 6850, magnet, accelerant, all that. And that's kind of where we are. So there's still a lot of football left to be played. You know, Trump with one tweet or one off the cuff statement, which we know Trump never makes an off the cuff statement, with one off the cuff statement, shoot from the hip, we can go down 35 points or up 35 points in a heartbeat, you know.
yeah.
So, you know, there's a whole level of uncertainty of like, oh, what's he going to say? You know, what's he going to do? And that's where we ran into the story just for fun.
Okay.
And so, you know, here we are. So, do we get a Taco Tuesday? We'll find out.
I don't think we're gonna see any type of tacos or whatever similar concepts around the Greenland. I think he will do everything he can to get the world ready for his takeover of Greenland. So it's just going to reiterate.
And it's funny, I see it differently. After we had that discussion, I was mulling it over. I see Greenland, the rare earth and all that kind of stuff is the excuse. Financially, it doesn't really make sense what it would cost to mine it in the snow with no roads, whatever. I think it's a totally different play. I think it's a geopolitical military play aimed at Moscow to push Moscow one way or another to get NATO behind putting bases and putting men in Greenland to protect against the Trump invasion. But really, it's getting forces into Greenland and making a NATO presence there with a gun at Russia's head. I think that's a gambit, that's a total distraction, and that this is really military, nothing to do with, you know, it has nothing to do with the rare earth at all. Yeah, maybe that's a little sideshow. It's geopolitical and strategic placement of troops and bases is what I think it is. Because the financial doesn't make sense. It doesn't make sense the other way.
Well, you just assume that.
There's
You just
two old
assume
ass.
that you know.
Let me answer this question. There's two old ass Air Force bases in Greenland. That's not enough.
But there are two things. One, you assume that you know how much money is buried there. So, you come up with a math and you say it's not worth the laying roads and doing all the infrastructure. But then again, you don't really know how much money is buried there. That's one thing. Second, I am pretty sure that other than what they push in the media, so like if you ask anyone, why does the US wants Greenland? So they'll say, well, precious metals, rare earth, stuff like that. Yeah, maybe. Well, that's for sure, yes. But I assume there's more. It's like a strategic location on the globe. They probably want to
I
do some
think
other
that's
stuff
more.
there. They
Yeah,
want
I
to
think that's
push,
more.
they want to, maybe they found a way to shorten the distance to the moon by 7 hours from Greenland. Who knows? I mean, there's so much stuff that is not shared with the public, but it's pretty obvious that Trump is is taking over assets that are not necessarily his, right? We spoke about that. Venezuela, Greenland, who knows what's next? And I think he means it. I think it's like 100% he's gonna do that either way, right? He's gonna pay for it or just take it, or take it and then rent Finland to mine the stuff. I don't know, whatever, but he
I'll
means it.
tell you what I think, and we could both be wrong. I could be wrong just because I think it does ring true. I think he makes a deal with Denmark and with Europe and everybody after blustering around, says they're gonna mine rare earths together or whatever it's going to be. It's not going to pay. Maybe it'll pay a little bit. It's just too expensive, and it's a 10-year project. It's not a project for today. Who knows who's going to be in office by then? And then some military bases are going to be beefed up. Putin Putin has had trouble with Russia. Historically has had trouble with Finland. This just adds another buffer to that whole Baltic Sea area right on Russia's, northern border. And it's just kind of like a reminder, a chip, a placeholder. And we get, Germany and everybody, they're already sending troops there or getting ready. Good. That's what we want. And who ends up there and what it ends up looking like in 3 months or 6 months, I think the play is to beef up Greenland strategically, militarily, however that happens. Maybe, whoever builds bases there, maybe NATO, I don't know. But I mean, to your point, money and security both don't make sense. If they want bases, then okay, they already have that. They got to get NATO involved in the bases.
Yeah. Yeah, well, eventually, yeah, for sure, they need NATO.
Europe's not going to build more bases. They got to get NATO to build bases.
Yeah, but it's all,
They got to get Germany and France to put up the money and build bases.
I'm sure that everybody will flip, meaning that, the Europeans say, yeah, you're not going to do that. We're going to retaliate, whatever. But they need money. So it's just a negotiation way of, trying to raise how much money US pays them for whatever. And you can't really stop the US if it decides to do something. It just does. It just showed it in Venezuela. So, nobody can fuck with them anyway. So it doesn't really matter.
Yeah, and the truth is, people are saying it's Trump just losing it, and kind of the bases or the medals don't make sense. So what's the play? I don't know. I think the play is 10 moves away from here, and it's nothing what we think it is. But I think it's military. I think it's to shore up the dollar. I think somehow it's got to do with the petrodollar. Somehow it's got to do with keeping the dollar strong enough. And I'm not a macro bro, so that when rates go lower, because they will, because the Fed is going to be stacked, and that's going to be what's going to happen. And as a way to kind of cushion this whole thing, I think it's part of that tapestry.
Well, anyways, it is what it is. We'll hear about it this coming weeks. And as you say, we won't know exactly the reason, but he's going to take it over. So,
okay, right? We shall see. More will be revealed. Okay, so getting away from the politics and for us trying to imagine what's going to happen when we know that none of us really know what's going to happen. At least I know that I have no idea. I'm just speculating and just kind of having fun bullshitting. I mean, I personally don't take any of what I say here seriously. Hold on. Let's get back to the chart. Okay. So where are we? Right. Everyone has so many opinions. You know what they say that's like. I've learned over the years to wear my opinions like a garment loosely. That's because I think it could totally be wrong. And that wouldn't shock me at all. Okay, so I think so. Big deal. What's the difference? Difference what I think. So anyway, so here we are, magnet 6,800. We're gonna probably fart around here most of the day. My man. Probably gonna fart around here most of the day, and I'm gonna go see what the goats are doing, and take a quick last look at what's going on in volatility. Let me see. The VIX is around 19.33. So the VIX and the VIX futures are kind of collapsing right below 20. I would be surprised if we hit 20. I wouldn't be surprised if we ended up at 19, give or take, or 18 and a half. For some reason, 18 and a half or a little bit more stick in my brain. Yeah, I just don't know that we get to 20. Let's take a look again over here. I said here, yeah. Now here, this is 19.5. The VIX is 19.3. They're going to meet somewhere around there. And now look at this. If this is correct, we're in backwardation. The 30-day futures are more than the 3-month futures. They're already backwardated, we're already short-term, whatever. So we're already at that inflection point, a couple of days,
Wait,
whatever.
come again. What did you say?
Take a look. The 3-month VIX.
Yeah, the 3 months is where I have the position. I can tell you that
is 19. Is 18.99.
Yeah,
The
even a
3
bit
month is
more than that.
18.99, and the 1 month is 19.5. So we're already backwardated. So we don't stay backwardated for long. We're going to go back to contango. And so this is going to shift back toward a more normalized yield curve. I don't know, this week, next week. I'm thinking sooner rather than later.
This will obviously generate a lot of vol selling in the options for the 1 month, and they're going to buy the future of the VIX for the 3 months.
Yep. Especially for the roll.
Yeah, I mean, it's the same. It's like, well, it's on an arbitrage, of course, but yeah, this will be very attractive to certain, like, to big players. So this should be normalized. Yeah. If it doesn't, it's kind of strange. It means there's some stress or some lack of liquidity or some provision that doesn't enable these funds to do it from a collateral point of view or something. I mean, I would expect this to normalize like any day, right? Like tomorrow, right? Like
that's
tomorrow.
my point. I agree. Yeah. And this is also, again, like we were both saying, a function of low liquidity. So everything is distorted here. So kind of whatever we say is distorted,
Yeah. No, but this is worthwhile to check in tomorrow when the market is fully functioning to see this gap close.
And Selena makes a good point. Okay, so maybe we have a crappy week this week, which would actually be nice if you're a bull to clear the deck for Mag 7 earnings coming up. Maybe they're down a little bit, and so there's room for them to go up. I don't like when Mag 7 are at or near all-time highs going into earnings, because it's really hard for them to keep going. However, if they're down 10%, 20%, whatever, then good enough is good enough. Even bad enough might be good enough, So that's a whole nother fly in the ointment, Why do you say unfortunately? Why do you say bullish factors unfortunately? I don't know. I guess I would think that most of our 401ks or retirement accounts are long. And so fortunately means we go up. Yep. Is by next week. Yeah, probably. And maybe, and so there's two schools of thought. You're probably not going to get the bottom, so buy early, or you're not going to get the bottom, so wait till you wait till you see the all clear and buy a little late. I tend to buy early. I'm going to admit it. That's what McGraw, Dr. McGraw is from Quick Draw McGraw, who was a cartoon character, and the whole implication is quick draw. Kind of jump a little quick. Okay, well, this was fun for an off day. I didn't think I'd be doing this, but when I saw what was going on, actually, Valtrader, you and I were chatting, this morning about a whole wide range of things, and I think you had said, let's talk about this on the live broadcast. You didn't realize at that time that the market was closed, and I said,
I didn't.
I said to myself, you know what? This would be a good time to do it because people are sitting there with kind of like an information vacuum. People kind of want to know what's going on. So let's, do the
You want to deep dive into the VIX or what?
We're going to the VIX to the market in general. I mean, you and I were talking about the VIX and volatility was our first discussion before we kind of went off into other things.
Yeah. So if you want, we can first explain in a clear way, instead of like a lot of people don't really understand how the options on the VIX are priced throughout the term structure. And so we can touch base that. So like there's a clear deterministic understanding of how that mechanism works and what exactly does it do. And what to be careful about when you do VIX options, right?
Okay,
so you don't end up being right on a VIX move, but making zero money.
Right. Okay, so the VIX options are priced off the VIX futures, and so right now, what do we see? We saw the VIX future was around 9, around 19.
Wait! Don't simplify it. Don't simplify it that much. I mean,
okay.
People need to understand there's no magic here. If everybody opens now SPX options expiring March 17, they will see the 50 delta sitting at around 19 VIX, right? Now, today you might say, well, that's a spot, but that was still the case 2 weeks ago when the spot was 12. The March 17 expiry on the SPX, the delta 50, right, which represents the at the money fall, was trading 19. It's still trading 19.20 right now.
Well, so that's the sticky strike shift.
Yeah. So what people need to understand is that when you touch any option on the VIX, you're basically trading the VIX future. The VIX future.
Right, the VIX future. That's what I was trying to say.
The VIX future could be any VIX. It has nothing to do with the VIX that you guys see on the news, or if you open the chart and you
100%
trading view VIX 100%. And you get a number. Nothing to do with the options you buy. So the first thing people need to understand, options are on the future. So if you want to know which VIX is implied in the options of the VIX, you need to know what the future of the VIX shows. Not
so let me just show this to. And so if we look right here, we see the 20. I'm just going to keep it simple here. We see the 20 VIX, right? The call and put are roughly the same.
Yeah, that's
what's being priced in.
Yeah, and that's the implied spot of March. They think
that's the implied spot of March.
Yeah, they think that the VIX will be 20 by then. So when we get to March 18, the VIX that we all know as VIX will be 20.
They think.
Yeah, but by the way, they're almost right by now.
Right, but it's not March. I mean, but by the time we get to March, it could be 17. We don't know what it's going to be.
Sure. So now the equivalent of this, if you try to normalize
because remember the term structure slopes this way, but by the time you get to the back end, it's back down to here, and something else is the back end.
Now, if we would have done this discussion 2 weeks ago when we did it originally, when we set up those VIX spreads that you and I did, if we would have done this discussion then, and we would have looked for a VIX 20, right, on the near term January, for example, right, we would go to the SPX and try to find which strike has a 20 IV. Then we would have seen back then that the market needs to go down 3% to reach a strike on the skew that is on the SPX skew that has an implied vol of 20, a 3% down. Now the market didn't go 3% down, went only 2%, right, in total, but obviously the IV went up. So now all these numbers between March and now, everything is merging into this 20 VIX, right?
Right.
But the most important thing to remember is this: if, for example, I did an 1823 call spread, debit spread on the VIX options 2 weeks ago for March 18 or March 17. Now, we can all agree that the market went down since then and the VIX went up, and I did $0, zero, like not even a dime. I didn't lose, but I didn't make anything on these moves that the VIX did. The VIX went from 12 or 13 all the way to 18 last week. Didn't make a dime. And the reason is that the spread was already pricing a VIX 19 when I first set it up.
VIX 19. That's what we talked about. Right.
Now, obviously, I didn't do a mistake. I know what I'm doing, and obviously, that position, if you're trading options on the VIX 3 months out, it's more like a lotto, because what you're saying is, I'm willing to make no money up to that future, which is 1920, and start making money only above that. So you need a big event for the VIX to go through 20, and only then you begin to start making money.
And the way I did it, and this is just a small one for fun, was this isn't price strike, it has a zero bid, whatever. I did a 15, 20, 25 fly.
Wow, that's nice.
15, 20, 25 fly. Figuring that we're going to end up near 20, which is kind of where we're thinking we might end up. And if we do, that's max profit. This 15 gives me enough leeway to around 22, 23 your level. And really, we have to be over 25 for me to lose money, and it was cheap. It was cheap.
Well, that scenario, if that scenario happens by expiration, but if the VIX goes 30 and eventually expires 22, you hit the jackpot.
Right. Hit the jackpot. Right. Just leave it. Right.
Now, VIX, you don't touch it. It's not like the SPX that you know.
Right. This isn't something you actively day trade.
Yeah, you don't trade it. Yeah, you just let it be. Especially this is a non-risk trade. So other than the cost, which is around 4 points, you basically just leave it be, because the VIX goes crazy and then gradually comes down. So yeah, this might work. I mean, the 22 might be that magic number. But the point of this discussion is just to make people aware of the fact that when you do anything in the options on the VIX, you must be aware of the future, which is the underline of the options. The underline is not SPX implied vol, but rather the future of the VIX, which obviously correlates to the SPX at the money vol, however the CBOE calculates it.
Whatever the volatility swap trade
so obviously it correlates to that, but it's not what you think. It's not the VIX. The VIX that you see in TradingView or in TOS is not the VIX that is implied in the VIX options. Kind of confusing, but just be aware of that. So once you are aware of that, then you know which spot you're trading and from which VIX you will start making money.
Well, it's actually two things. The VIX that you see in TradingView and TOS is that calculation of that strip, which has nothing to do with trading the VIX options, so to speak.
Yeah, which is kind of confusing. But again, I mean, once you understand that and you're willing to just, see it as a lotto, that's okay. I mean, whenever you do on the VIX, you always need a very large move in implied vol to make money. Otherwise, like if you guys follow or know of Z Contrarian, which does these very large positions on VIX options as a retail trader, right? He always does ratio spreads,
Always
even
does
a 1 to
ratio
3.
spreads, right?
Always, right?
Right. He
Because,
knows that
yeah,
he's got to sell that out of the money vol.
yeah. I mean, he says if it doesn't move, I'm gonna get screwed. So I must finance as much as I can from the long portion, rather than assuming that the VIX will explode to 30 or 40, right?
Okay, so let me answer this question here. So I don't look at the 50 delta. What I look at, just a quick down and dirty way, is look for put call parity. Look for where the puts and calls are basically priced the same. And here at 20, they're basically priced the same.
Yeah, well, no, but the answer to to his question is yes, yes. If you look at whatever expiration you look on the VIX, look at where the delta 50 is.
Let's see what the delta. I never even look at the delta.
That's the VIX that you're trading. That's the
Okay,
VIX
so
that
the
you're trading.
50.
So
Well,
the
no,
answer is
not
yes.
really. So the 50 delta here is 22, and the 50. So here the 50 delta is 22, 21,
Yeah.
22.
So you are trading. You are already going long VIX 22 when the actual VIX is 17 or 18, right? So you're already
But the deltas are always skewed in VIX that way. That's why you can't really look at a 50 delta to
no,
see.
but it does give you what it does. If you look at the 50 delta, you don't need to look for the future. You know what the future is. That's what it means.
We can agree to
Just look
disagree
at
on that.
the March
We
future.
know what people think the future is. We don't know what the
No, but
future
look now
actually
at the
is.
March future. You'll see it's trading 22 or 21.50.
No, it's not. The March future is trading at 18.99.
No, this is not the future. Look at
Okay,
the
I'm looking.
future.
Okay, you're right. Okay, my bad. Let me find the
Yeah,
future. Where is it?
it's important to be
You're
like
right.
very
You're right. You're
accurate with
right.
these
You're right.
things.
You're right.
Yeah, that's the one.
This one here?
3 months. Well,
No.
that's the rolling 3 months. Just open it up, click on one of them, and then
Hold on. Hold
drill
on.
in to open the actual future of March 18 or March 19.
Hold on. Let me just get this set up the way I need it to be set up, so I don't screw my dashboard up even more. Next 9 day over here. Okay, so right. We need to find the future for here.
Yeah,
And
just
so now,
start writing VIX, and then TradingView will enable you to choose the specific contract, not like the continuous contract. You want the specific contract.
right.
So
So
just write VIX.
futures, right?
Yeah, you need to
Futures
write VIX.
and VI and VX.
Yeah, that's the futures. Open the first one up.
The first one, this is the continuous contract.
Yeah, but there's one that
Here,
you can
here,
drill.
here, I think is this? Here's the 4 month, 3 month. Where's the?
Let me show you here. Let me open up here my side on the TradingView. I'll show you.
That's the VIX 1 month. We know that.
From that window, you can actually choose the specific.
Yeah, I'm trying to find the specific one.
So VIX futures. And
I guess it's going to be.
so it's VX1. VX1 is the front month. So VX1.
Right, VX1 is the front, right?
Yeah, VX1 should show 19.5 VIX.
Okay, here's March right here. I found the March. Okay, here's the March 20. Yeah, I found it. Here's the March. I found it right here. It's 20.01.
So that is exactly the delta 50.
Except not on the chart. When you look at the chart, the delta 50 is 22. That was my point to Selena. The delta 50 is 22.
Is it? I don't know. I didn't see that.
I guess look, the delta 50 is 22, but if you look at the pricing, 20 is where the pricing tells us. So that was my point. Don't look at
Oh yeah,
delta,
the
look at the
strikes.
price.
I mean, if
Right.
obviously the strikes are 1 point, that's huge. 1 point on 20, right, is very large. It's 5%.
Yeah, 5%, right? 5%.
Yeah, so obviously the strikes distort the actual that concept. But yeah, you'll find the Delta 50 or two options which are pretty similar, call and put. That's pretty much the future.
Yeah, just look where you find the price of the put and the call about the same. Let me just, we're going to wrap up in 1 minute. So Perry is saying that last year his VIX option spiked to 32, but there were no buyers at that price until it dropped to the low 20s. You mean that you were long and then you were trying to get out and monetize it, but you couldn't get the money? Is that what you're saying? Because I've had similar things where I've had long VIX calls as part of a spread or whatever, and it shows some kind of crazy bid ask, and you basically have to sell it at the market, sell it at the bid fast, or otherwise they're going to yank the bid.
Yeah, a lot of times, I mean, the automated quoting machines will pick you up even if you're just under the fair value, if you know how to calculate it or set it up on toss. Then if you just come underneath that, the machine will take you, of course.
Yeah,
because
yeah, and that's why
enough
I sometimes go a couple pennies below what's quoted as the ask to try to get out that way on that kind of thing.
Yeah, but it's kind of tricky. I agree with the VIX because you have an expiration, and if you get an event tomorrow, right, on something that expires in March, you won't really do that much money.
No, you won't do that much.
And people will say, well, the VIX is going to hold here for 2 days. Why would I buy now for March? So you'll have no buyers for your position.
Right. Nobody's interested in those 20s when we're at 20. Right.
Yeah, in a way, I think that the reason I did March was because it was very, very cheap. Historically, a 5 wide and even a 10 wide with a pay ratio of 20 to 1 or 10 to 1 is pretty cheap. So that's why I did it. But if an event happens, soon, like during January or up to mid February, I'll probably not make a lot of money, even if it will go to 40, right? So
okay, now let me just point out to people what Perry was saying. So he's pointing out, and this is kind of what sparked this last leg of the discussion, that last year during the VIX spike, he was long VIX calls, whatever strike, doesn't really matter. And he was trying to get out, but he had trouble finding buyers until we kind of pulled back a little bit. And his other point is, and it's also a valid point, you only have X amount of time to profit on that VIX spike. VIX tends to cluster, so when it goes up, it's going to stay clustered for a couple of days, maybe, whatever. And you got to get out when you can get out. Otherwise, you're sitting there, and you were right, you were a genius, but you didn't make money. If you're trying to trade the VIX versus putting it on as a hedge, different kind of trade, different kind of idea.
Yeah, you really need to know what you're doing when you're doing the VIX. There's no real reason for that. You can do the same position in the SPX options, much easier, much more liquidity, and you don't have you don't need like a super event of vol to make money. Whereas with the VIX,
that's a whole other discussion. Structuring your puts for a slow bleed down versus a volatility spike is a different structure. We're going to wrap it up because it's almost 10 o'clock already. This was fun. I hope you guys enjoyed it. Yeah, right. The VIX is a whole nother animal. Yeah. We're going to be doing a subscriber webinar on Wednesday. We'll dig into the VIX options trading and the VIX and the decomposition index, and just kind of, it'll be a smorgasbord on all the VIX stuff. And I got involved in the VIX, so to speak, not because I particularly wanted to get involved in the VIX, because trading SPX, I found that I had to know more about volatility. And the more I knew, the more I found out that there was to know. And so looking at this toy here, the VIX versus the VIX futures, this other one, and we're kind of, here we were about to turn, and now we're sort of not quite ready to bounce back this way yet. But this is closer to over than to starting. Now, can undercut these lines. I didn't make this, somebody made it for me. But it tends to work pretty good. See, look, when we're down here in this range, kind of the move is done. When we're up here in this range, we're kind of getting ready to top. And so, could undercut a little bit short for a couple of days. So that's why I think, most of the damage is already done. So anyway, that's it. We shall see. What does he say? That's relevant. Great work. Thanks, guys. And it wasn't planning to be a workshop, but just turned into that. And if you guys enjoyed this, like and retweet and restack and share on YouTube or whatever it is that helps get this content out for other people to see it. Okay, everybody, go time. Have a great day. Enjoy your holiday.